I completely forgot I had this. It's that cold storage wallet with $4.4 billion of Bitcoin on it. Huh. A story that delves deep into the annals of crypto lore, 850,000 Bitcoin lost, a quiche-loving cafe man locked away and interrogated in a Japanese jail cell, and an 8-year hunt for the stolen funds. That's right, today we're covering the Mt. Gox saga and why people are getting so very concerned that it's going to absolutely tank Bitcoin's price in the next few weeks or months. But why exactly would that happen, and is the worry justified? That's what we're going to find out today. Welcome to Crypto Snap.
You set me up here to check. I'm doing that. I think attention should be paid.
On July 6, Nobukai Kobayashi, the appointed trustee attorney in the Mt. Gox recovery process, published a press release stating that the bankruptcy board of trustees were preparing to make repayments to victims of one of the biggest crypto exploits of all time. It's now estimated 141,686 Bitcoin will be reimbursed to at least some of those that lost their holdings at the hands of the hack on Mt. Gox way back in 2014. At today's prices, that's a little under $3 billion. But hang on a hot dang minute, what is, or should I say what was, Mt. Gox, and who is that wallet finding man we piqued your interest with at the beginning? Initially, Mt. Gox was launched in 2006 as a place for people to trade monsters and spells. No, seriously, it was a trading hub for my childhood staple, the fantasy card game Magic the Gathering. That's why its name was MTG, Magic the Gathering, Ox for exchange, Mt. Gox. There you go.
Yeah, there's a good buck in that racket.
However, when founder Jed McCaleb decided this business venture was struggling somewhat, he did a whole swords to plowshares 180 sort of thing after reading about Bitcoin on Slashdot, vowing that Bitcoin was, quote, awesome, and that there was a massive exchange-shaped hole in its ecosystem that needed to be filled so people could trade it freely. So that's what he did. And then he sold the business to Mark Capellas in 2011. He's the Chad we're actually interested in today. Under Mark Capellas, Mt. Gox became the true home of Bitcoin. By mid-2013, only 2 years after taking ownership of the platform, it was handling over 70% of the world's Bitcoin trades, with a daily trading volume north of 200,000 Bitcoin, absolutely crushing competitors like Bitstamp and BTC China. Sure, it wasn't all plain sailing. The Fed seized $5 million from its bank accounts at one point, it had lawsuits with its former partners, and thanks to admitting it had lost millions of dollars worth to hackers, the price of Bitcoin suffered a mega flash crash, capitulating from $32 to just 1 cent.
And 1 cent. That's right, people. 1 cent.
But in those mad years, Mt. Gox became synonymous with cryptocurrency. It also became synonymous with savory foodstuffs when Capellas went full baker, never go full baker, creating a Bitcoin cafe downstairs in Mt. Gox's HQ. He spent $35,000 on a pastry oven to bake French quiches. Former Mt. Gox employee Thomas Glucksmann went as far as to say he was obsessed with quiche. The man even hired a chef who was a specialist in making quiches. And that's why he's our quiche guy. But none of this chaotic, half-baked energy was anything compared to what really went down in early 2014. See, on February 7th of that year, Mt. Gox halted all Bitcoin withdrawals. People panicked and the coin dropped as much as 20%. 3 days later, in a press conference, Capellas tried quelling people's nerves by explaining the pause was down to mitigating an issue in Bitcoin's code that was allowing someone to alter transaction details and make it seem like large transfers just hadn't happened. Investors were strung along for a few weeks. Then on February 24th, everything went dark. The same day, a document was leaked stating that 744,408 Bitcoin belonging to users had been lost, as well as 100,000 belonging to the company. 4 days later, Mt. Gox filed for bankruptcy. Think such a hack would be bad now? Well, back then it represented 7% of the total Bitcoin supply. The fallout was a total firestorm, a conflagration hot enough to send the whole crypto thing back underwater for a while and everyone to return to the good old-fashioned American silver dollars and the like. Oh, and of course, this isn't your credit card provider, and so there's no way of claiming your money back either, it's gone. Now you're probably wondering who pulled off such an audacious heist. The short of it is, nobody really knows. But at least at first, everyone looked to Capellas himself. People cried inside job, encouraged by an Excel file seeming to show a balance of over 900,000 Bitcoins still floating around in the hands of Mt. Gox after the hack. But it wasn't enough evidence to indict. Even if the document was real, it could have just been the case that Mt. Gox employees hadn't updated the spreadsheet. I know if I'd personally lost 850,000 Bitcoin, amending an Excel spreadsheet would not be the first thing on my list. Packing my bags would be.
You don't have to wait. You can leave whenever you like.
Others, some labelled experts, also argued that only 386 Bitcoin was actually lost due to Mt. Gox's explanation of a transaction malleability in Bitcoin's code. Not 850,000, 386. But nothing was ever firmly found nor concluded. Capellas eventually did serve 30 months in jail starting in 2019.
While he was handed a prison sentence of 2 years and 6 months, it was suspended for 4 years, meaning Mark didn't serve any further jail time over the original 12-month stint he did when the charges were first brought against him back in 2015.
But only for being found guilty of falsifying data to inflate Mt. Gox's holdings. Since then, the US government has also brought down Alexander Vinnik of rival exchange BTCE, believing he processed the stolen Bitcoin and knows where it is. But while he too saw jail time, it wasn't on charges directly linked to the hack. In a more recent development, Russian lawyers claim to have info that 2 Russian nationals have almost 200,000 worth of the stolen Bitcoin. But importantly for this video, a stash of Bitcoin was actually discovered after the collapse. 200,000 coins to be precise, and they were only found because Capellas himself stumbled upon an old cold wallet that he'd forgotten about and left somewhere. Which frankly blows my mind. I mean, who stumbles on something like that? It would be worth $4.4 billion at today's prices. Flash forward a few years, last November, Mt. Gox's bankruptcy trustees approved a plan to return the 141,686 Bitcoins remaining from the original 200k stash for release back to the original victims of the hack. Now, with that redistribution seemingly very imminent, the question on everyone's makeup-stained food holes is, well, what's going to happen next? Well, what do you think is going to happen next if your $800 per coin investment that you lost 8 years ago is now worth $20,000 per coin? You're going to dump, most probably. It's a 2,400% return on your investment that you thought was gone for good. Of course you're going to sell it. Or at least a lot of people will anyway. Which is why the Twitter sphere is already tolling their Armageddon bells, calling this a Black Swan event that's going to tank Bitcoin's prices. The fear is that such a large sell-off of Bitcoin all at once will cause a liquidation cascade, where traders get really nervous about the falling prices, selling off their holdings, in turn further depressing prices, which causes more people to panic sell, and on we go. Sounds dramatic, but we have seen this sort of thing before, kind of. Bitcoin fell as much as 50% in 1 week thanks to the pandemic back in March 2020, for example. Add to this the fact that major crypto players are already stretched thin at the moment due to the cross-asset class bear market. Bitcoin's price is down 50% since the start of the year, and the S&P 500 is down 20%. And the fact that there's a gaping $60 billion hole in the DeFi economy due to Terra's Luna/UST collapse, which has caused an ongoing contagion in the space, a domino effect of exposed crypto lenders going under, causing lenders exposed to those lenders to go under, and on we go with that one as well. In this tinderbox of stressors, any further sudden downward price action on Bitcoin could devalue the remaining collateral left to those exposed players. This could theoretically cause a further wave of bankruptcies and panic selling, which pushes BTC prices well down into Goblin Town, perhaps even below prices that we've seen in the past 5 years or longer.
Oh my God.
Oh no.
But here are 3 reasons that are probably worth considering to suggest that it isn't as bad as all that. Firstly, remember only 141,868 Bitcoin were actually recovered, which isn't an awful lot more than the 80,000's worth of Bitcoin Terra recently dumped on the market. And sure, the price did suffer, but we didn't really see a steep decline in BTC until well over a month later, when the wider financial markets fell off a cliff too. Also, it's worth noting that the trustees of this 141,000 actually sold 38,500 of the original 200,000 back in 2017 and 2018 to raise an initial amount of cash for creditors. And at the time, they stated, quote, "Upon consultation with cryptocurrency transaction experts, the Bitcoin was sold in a manner that had no effect on market price." so make of that what you will. Secondly, it's unlikely all 141,000 coins are going to be immediately sent to the relevant parties overnight. Nobody's going to see a sell order north of 100,000 in one day, all from wallets related to this hack. Simply due to the logistics involved with creditors, any kind of sell-off will be spread out over time due to the complicated nature of returning the funds to the right wallets. Because, spoiler alert, Mt. Gox doesn't exist anymore and it isn't exactly keeping its records up to date. And thirdly, large firms have already bought up a swathe of creditor claims and they're likely to opt to be paid in Bitcoin by the trustee instead of cash. The eventual sale of those Bitcoins will then likely happen over the counter, which if you don't know is just a method of trading directly between two parties without the supervision of an exchange. This means any sale of those Bitcoins in the hands of those large firms won't appear on your standard exchanges like Binance or Coinbase to give you a big old spook. And finally, just to sprinkle in a little bit of devil's advocacy here, these Mt. Gox victims, maybe they'll do something wild and crazy and unexpected, like keep their Bitcoin. I mean, these were folk who invested in cryptocurrency back in 2014. They'll have seen everything and more by now in the intervening years. And so today's depressed price of around $20,000 per coin might not actually be that appealing to them. But of course, this is all just speculation. Who knows how both the creditors and the market will actually react when faced with such an increase in the supply of Bitcoin. At least the victims, though, will have some very fine recompense for their 8 very long years in the wilderness of involuntary hodling. You can buy a hell of a lot with a 2,400 return on your investment. Maybe even a few quiches for yourself. Go wild. What do you think? Let us know in the comments below, and if you're enjoying this video, please do give it a like and subscribe to the channel as well. All your support and feedback helps us make better shows in the future. But until next time, wherever you are, whatever you're doing, whatever you're trading, look first, then leap.